Alright, hi everyone. Welcome to today's live analysis session brought to you by IC Markets. Alright, before we start, I just want to make sure you guys can see my screen. You should be looking at the first page of the PowerPoint slide, IC Markets webinar live analysis session, 31st July 2023. And also, just want to make sure you can hear me loud and clear as well. Do take note, we also have the live chat box, so please feel free to send in any requests or questions that you may have for today. Right, okay. Um, right, hope everyone's had a great weekend. I don't know if any football fans out here. Well, here in Singapore, we've got the likes of Liverpool FC, Bayern Munich, and Tottenham Hotspurs in town as well for a round of exhibition matches. Right, yesterday, I think we had Spurs. Oh no, sorry. Yesterday we had Liverpool and Leicester, and then on Wednesday evening we've got Liverpool and Bayern as well. Right, so if you're big football fans, it's a good chance to a good opportunity to see some of your stars, your favorite players and stars in the flesh. All right, okay. Just want to make sure you guys can hear me loud and clear. And yes, please do drop your requests or questions in the live chat box as well. All right, just for those who have just joined us, right? Okay, so this is a live analysis session brought to you by IC Markets. As usual, here's the disclaimer. So please take note, this is marketing communication and does not contain or should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. The analysis contained herein does not constitute a personal recommendation. It does not consider your personal investment objectives, investment strategies, financial situations, or needs. And also, I do take note of the risk warning that comes with trading Forex and CFDs, as they carry a high level of risk to your capital and you should only trade with money you can afford to lose. Right, so please perform all due diligence before putting on any trades. Okay, so my name is Ketan Rameshchandra, and I'm an investment analyst here at Everest Fortune Group, where we have been the finalists for the best FX and equity research for the following years, 2019, 2020, and 2021. Right, so this webinar series is brought to you in a special partnership with IC Markets and Everest Fortune Group. Alright, so here's just a simple agenda for today. We'll start off with the key economic events this week. Right, following the three central bank interest rate decisions that we had last week. We had the Fed on Wednesday, followed by the ECB last Thursday, and we rounded things off with the Bank of Japan on Friday. Right, as widely expected, the Federal Reserve and the ECB both raised interest rates by 25 basis points, with the Fed bringing the upper target range up to 5.5%, while the ECB brought their main refinancing rate up to 4.25%. And of course, Bank of Japan kept their policy rate at negative 0.1, but they did surprise the markets by tweaking the yield curve control, or YCC, by letting the 10-year bond yields rise slightly up to positive 0.5%. So basically, in a way, they are sort of increasing the borrowing rate or lending rate without actually increasing the policy rate. So that's a simple takeaway from Bank of Japan's policy actions last Friday, right? So moving on to this week, we've got the Reserve Bank of Australia coming up tomorrow, right? So with their announcement of the cash rate decision, and then we have the Bank of England on Thursday, 3rd of August, uh, following up with their turn, and of course, and to end things off, it's also a strong employment data driven week from the US. We've got JOLTS data coming up. We've got ADP non-farm payrolls, and the most important one, we've got BLS non-farm payrolls. Right, just to reiterate again, do take note we have the live chat box going on, so please feel free to drop your questions in here. And yeah, let's just start things off by looking at the calendar. All right. Okay. So here we are on Forex Factory. Okay. So I'm on GMT time zone, so UTC plus 0. So we're looking at this week's calendar. Right. So as we mentioned, we have the Reserve Bank of Australia coming up tomorrow morning at 4:30 a.m. Right. 4:30 a.m. GMT, where they are forecasted to raise interest rates by 25 basis points to bring it up to 4.35%. But given that inflation has been falling pretty steadily in Australia, we may actually see the Reserve Bank of Australia hold rates once more. If they do hold rates, this would be the third time this year that they're doing so. So do take note, although the forecast does indicate an increase of 25 basis points, it's quite possible, it's quite likely that they may actually keep rates steady. All right, and as we mentioned, we also have JOLTS job openings. This measures the state of or the health of the labor market in the US. So if we get a relatively strong number that's higher than the forecast, this proves that job vacancies, this shows that companies are still hiring, and they're looking to expand their labor force. So that's positive for the economy and also positive for the US dollar, right? And we also have um, ISM manufacturing PMI coming up, which will give us an insight into the state of the manufacturing activity in the US. This has been contracting, as we can see here. This has been contracting since December of last year, and the latest forecast is predicting another round of contraction as well. All right, and then of course we have New Zealand data, unemployment rate out of New Zealand on tomorrow as well. Okay, and then on Wednesday, we've got the first look into non-farm payrolls, which is conducted by ADP. This is a private sector company that measures the level of employment change in the US. So this will give us the first taste of how employment has been progressing in for the month of June. Or no, sorry, this would be for the month of July. Yeah, this would be for the month of July. Right. Then we've got, of course, the next central bank, Bank of England, at 11 a.m. GMT on the 3rd of August, where they too are widely expected to raise their interest rates by 25 basis points to bring it up to 5.25%. Again, because inflation has been retreating pretty steadily in the UK as well, it's quite possible that they may hold rates as well, right? All right. Okay. All right. Hi, Jamilu. Good to see you. Right. Great to see familiar face names as well. Yes, and welcome to the webinar. And please drop your request in the chat box, right? Okay. And then followed by Bank of England, we've got ISM Services PMI at 2 p.m. GMT. As you can see, the ISM Services uh, sector, or rather the US services sector, has been expanding pretty well, especially in the month of June. And for July, we've got a forecast of 53 as well, which also indicates expansion. So as you can clearly see, the services sector has been pulling up overall economic activity in the US and in most other developed nations. So we can expect services to pull the economy forward for now. And then, okay, on Friday, 1:30 a.m., the RBA will release their monetary policy statement. Uh, on this could be no, this shouldn't be the minutes. Minutes is too soon. Okay, I think there should be some. Okay, no, okay, right. So this will be 1:30 a.m. Okay, let's just check RBA. Is there some? Let's just check their website to make sure. Okay, coming up, 1st August. Yes. Ah, okay, yes. The statement will drop on 4th August as well. Okay. Right. So that's correct. Okay, so we have the statement, monetary policy statement by the RBA released on Friday, 4th August, 1:30 a.m. And of course, we'll end off the week with the one of the most important data points for the week, which would be the non-farm payrolls by the Bureau of Labor Statistics. We will also get an insight into the level of unemployment in the US as well as the average hourly earnings. All right. All right. Great to see requests coming in. All right, Jamilu, for sure. We'll definitely look into pound dollar, euro dollar, and of course, before we do that, we'll start off with the dollar index, right? Okay. So I hope many of you have managed to catch Desmond's pre-market live analysis as well. That was done earlier this morning, right, where he gives you the weekly outlook for the majors, commodities, as well as a little bit of gold and oil, of course, commodity, and also, of course, the indices as well. All right. Okay. So here I am on the daily time frame for the dollar index. Right. Okay. So as you can see, just quickly switch to the weekly time frame. You can see after the dollar index pulled back in mid-July, going as low as 99.60. Part of this reason was we had very strong disinflationary data out of the US, meaning we had CPI and PPI data, which continued to show that inflation is retreating from the consumer sector as well as from the producer sector, or rather the wholesale sector. And that is why the US dollar sold off aggressively during this week. But after that, it found the bottom, or it found support at about 99.60, and last week onwards, it actually started to rebound strongly. Last week, partly due to the strong Q2 GDP numbers that were printed on Thursday, as well as the low unemployment claims. Both of these factors, or data points rather, suggest that the US economy is still powering through, and that's positive for the US dollar. So that is why we saw the last 2 weeks uh, where demand for the US dollar started to come back in a very strong way. All right. Okay. So that's on the weekly charts. And I'll just switch back to the daily time frame. All right. So as you can see here, these are some of the levels that were established during this morning's pre-market analysis. Right. So let's just see if there's any changes to price as the day has progressed. All right. Okay. So first of all, how did we identify this first support and first resistance? All right, so first resistance is at 102. You can see there's a strong overlap here, which aligns with this is, I would say, 61.8% Fibonacci retracement level as well. And we can also see price is also sort of capped by this descending trend line. So you've got three factors that suggest that the dollar index is running into serious resistance around the 102 level, right? So three factors. First is the strong overlap that we see here at 102. Second is the 61.8% Fibonacci retracement, which is found by going on the swing high from 6th July and ending with the swing low on 19th July. And if we just zoom out a little bit, we can also see descending trend line, which price has respected it a few times. And so we have three factors that contribute. Let me highlight this. Three factors that contribute to us. No one. Sorry. Right. Yes, three factors that contribute to a very strong resistance area for the dollar index. Right. So quite likely as the day progresses, we already see the dollar index actually starting to retreat. It only going as high as 101.83 today, and it looks like it's running out of steam and starting to pull back, right? Okay, that's with regards to resistance. Okay, and of course the second resistance is found at this overlap resistance here at 103.54. You can see price running into resistance here on 30th of July, 30th of June, and 6th July as well. And also it touched the descending trend line as well before swiftly reversing to drop lower. Okay, now with regards to the support levels, we can see we have a nice intermediate support level here at 100.95. You can see price bouncing off this level back in 2nd of Feb. 14th of April and 26th April as well, and early May as well. Right, so this is a pretty decent support level, which is identified as intermediate support at 100.95. And the first major support is at the recent swing low that occurred in mid-July, which was at 99.60. Right, if we zoom out a little bit, can we see? No, there's no major. Yeah. Okay, if you were to zoom out, like if I were to just zoom out and just label, just extend this line as well, you could argue that yeah, there's a strong overlap here as well. So around this zone, 99.66, 99.60 is indeed a very strong support level for the dollar index. Right. Okay. So we are expecting the dollar index to reverse this week, right? Or at least at the start of the week, we could see it reverse. But do take note that we do have non-farm payrolls coming up on Friday, and should the other labor market data points suggest that the labor market is robust and resilient and continuing to add jobs, we could see demand for the US dollar pick up towards the end of the week, which could push naturally, which would push dollar index higher. So at least for the first half of the week, we can expect some weakness in the dollar index, and provided we have robust labor market data, then we could see that pullback start to reverse, and probably we can reach price could come back up towards the first resistance. Okay, now let's zoom in into the 4-hour time frame. We try and identify if there are any other levels or more actionable levels for us uh, to work with. Okay, right. Okay, so we did the Fibonacci retracement from this swing high here on 6th July to the swing low on 18th July to identify the 61.8% Fibonacci retracement. Let's look at some other more immediate support levels, because we can see this as of today, rather last week, price hit the first resistance and has pulled back from this level. So we can do a Fibonacci retracement starting from this swing low here on 18th of July and ending with a swing high on 28th of July. Let's pull up all the Fibonacci levels. Can we see if anything lines up? Okay, so as we can see, the 23%, the 23.6% actually is a nice overlap here as well. And we did see price indeed bounce off this level on Friday as well. So you could say that the first major support, not major support, but the first one of the first support levels to look out for as an intermediate support level on the 4-hour time frame would be at the 23.6% Fibonacci retracement. All right, so we can now that we are on the 4-hour time frame, we're trying to identify more actionable levels. So this is why I'm going to select this at 101.47 as my intermediate support level based on the 4-hour time frame. All right, and we can also see that the 50% Fibonacci retracement lines up pretty well or close with the intermediate resistance that support that was identified on the daily time frame. So in this context, okay, I'm going to keep 23, 50, and 61 because we can just see a nice pullback level here as well. Okay, so let's just clean it up. We'll keep 23, 50, and 61. And I'll just add my 61 here. Okay. Right. Okay, so in terms of resistance, okay, no change to the first resistance. That's fine. I'm just going to remove. Why can't I remove this? Right. Okay, just to clear this up a bit so we can see it more clearly. Okay, so as we can see, we have a nice overlap level here at 101.47. You can see price running into resistance here on 25th of July and then finding support last week on Friday. And it also lines up exactly with the 23.6% Fibonacci retracement. So this is a good intermediate support level to identify. So should price break through this level, right, then it's definitely a confirmation for the dollar index to continue to weaken, right? And the next major or key support level that comes in would be at 100.95, which was identified on a daily time frame, and we can see it also lines up pretty well, pretty close to the 50% Fibonacci retracement. So this is another strong support zone, which I'll just like to highlight like this. Right, so this level between 155 all the way to 194 is a relatively strong support zone here, right? So I think 23% shouldn't offer much resistance or much support for dollar index, especially if we expect it to continue to weaken today, at least for the first half of the week. Where it could really find pretty strong support would be at where the intermediate support on the daily time frame is, which also lines up with the 50% and 61.8% Fibonacci retracement. All right, so now that we've seen the general direction, or we have an overview of the dollar index, we can see how that translates for the pound and the euro. So naturally, if dollar index is uh, falling now, we can expect the pound and the euro to rise. So okay, let's start with the euro. Okay, let's start off with the daily time frame first. Right, so we can see um, the euro has been supporting, has bounced off this ascending trend line several times now, and just last week it came pretty close to this level before reversing to bounce higher. So we can see that price action is respecting this ascending trend line for now, and with the dollar index looking weak, we can expect the euro to continue to climb from here. All right, okay, in terms of resistance on the daily time frame, naturally the first resistance. All right, hi Kelvin, good to see you again. The first resistance would be at the swing high that was formed on 18 July on the daily time frame. Second resistance is this overlap level here at 1.115 that occurred in October of 2021. Strong overlap level here. In terms of support, we have done the Fibonacci retracement from the swing low on 6th of July, ending with the swing high on 18 July, and we've used the 61.8% Fibonacci retracement level to identify the first major support, which price did respect last week. So we had a combination of this overlap support at 61.8% Fibonacci retracement combined with this ascending trend line to give us a very strong support zone last week. Okay, for the second support zone level, we have it at 1.0830. We can see there's an overlap here that was formed since 23rd of June. So for a period of over 2 weeks, we can see price finding support above this level before bouncing to go higher. All right, okay. Now we're going to zoom in into the 4-hour time frame for the euro. Let's try and find more, or try and identify more actionable levels should there be any. All right, okay. Right, okay, so 4-hour time frame. Okay, we can see we can probably do a Fibonacci retracement starting with the swing high here on 18th of July and ending with the swing low on 28th of July. Let's pull up all the fibs. And we see if price is okay. We can see price has retraced back up to the 33.6% Fibonacci retracement level, and it looks like it could push higher from here. And we have 38 here, and 50, and 61 is indeed at a very nice pullback level here. So I think on the 4-hour time frame, this level here at 1.1146 would be our first resistance, right? We do remember this first resistance at 1.1252 is identified on the daily time frame, so it's good to keep that in mind. But right now we're doing the analysis on the 4-hour time frame. So for a more immediate or actionable resistance level, it's going to be this level at the 61.8% Fibonacci retracement, which is also a nice pullback level that we see here at 1.1146. So as such, for the 4-hour time frame, I'm going to put this as our first resistance, and this I'll just label it as a resistance for now, right? Okay. Well, okay. On the 4-hour time frame, we can label this as the second resistance, right? Okay. With regards to the other levels, I think we can remove the other levels and we'll just keep 61.8. Hey Dawson, yes, it sure is, right? Euro USD after bouncing off last week, right? After finding a bottom, making a bottom last week, it bounced up pretty strongly. But now it's having a slow week, slow start to the week, right? And with dollar index looking weak, I think we can definitely expect euro to slowly edge higher, at least for the first half of the week. All right, okay, let's see. Okay, so resistance levels for the euro on the 4-hour time frame. First major resistance is coming up here at 1.1146. Second resistance is the swing high that was formed on 18th of July. All right, first support, I think no changes to the first support. We can see that this first support was identified on the daily time frame, and it can still be used for the 4-hour time frame, right? Its price is currently trading, what is it, about 40 pips away from this level. So yeah, this is a good level to use. Okay, so we can also see that, okay, this 61.8% Fibonacci retracement was done from this, starting from this swing low on 17th July, ending with the swing high. Was it 17th? No, sorry, 6th July, ending with the swing high on 18th July. Okay, naturally, as price retreats and breaks through the Fibonacci levels, we can't use 61.8 anymore. This is no longer valid. So let's get rid of that, and let's see if 78.6 is something that we can use. Alright, so we can see here 78.6 is here. We also have this 50% Fibonacci retracement done starting from this swing low here on 31st of May and ending with the swing high on 23rd July. So we do have a confluence of Fibonacci levels, this 50% retracement and this 78.6% Fibonacci retracement, right? So what does Fibonacci confluence means? It just simply means there's more than one Fibonacci level. It could be a projection, retracement, extension, or expansion level that line up pretty close with each other. So this would be a pretty um, important level as well, or support zone as well, because you can see clearly last week price found support just above this level before bouncing higher, right? So in terms of for the 4-hour time frame, I would probably use this level here as and identified as our second support, right? So the second support is at 1.0930. You can see a pullback here that took place on 29th of June all the way till 3rd of July. 3 times price ran into this level and got rejected. And we can also see that this level lines up pretty close with the 50% Fibonacci retracement as well as the 78.6% Fibonacci retracement. Okay, as usual, 38 can no longer be used, so we're going to get rid of 38 and just keep 50%. Right, okay. And of course, this second support was identified on the daily time frame, so do keep note of that. But for the 4-hour time frame, we don't need it, so I'm just gonna remove it from the chart just to keep the analysis clear. All right, okay. So so with dollar index pulling back, naturally euro dollar is going to edge higher as well, and I think we can expect that at least for the first half of the week to take place before US employment data will start to provide the catalyst uh, for the demand or lack of demand for the US dollar. All right, okay. This is euro USD. Can we do anything else? Let me check. Maybe we can do a Fibonacci extension. Let's see. Do I help us identify any other support levels? Perhaps can we do an extension here? All right, okay. Okay, so we're not going to use 61. We can use 78.6. Right, so as you can see, this support zone here between 109.30 and 109.50, we actually have 3 different Fibonacci levels adding to the confluence, right? So we have, just to recap, we have the 50% Fibonacci retracement level here. We have the 78.6% Fibonacci retracement level here. And then we have the 78.6% Fibonacci projection level as well. So we got 3 different Fibonacci retracements, or Fibonacci levels rather, that have helped us to identify a strong support zone for the euro, which was clearly respected last week. All right, so this is how we've done identify the second support for the euro dollar. Alright, okay, now moving on to the pound. Once again, we'll start off with the daily time frame. So first of all, I think what the first thing that we will all notice is this strong ascending trend line that's been going on since September of 2022. You can see price, especially since May of this year, price has bounced off this level multiple times and it's proceeded to go climb higher each time it has occurred. Now let's see whether this will continue again. Right, so we have two factors that contribute to 1.2850 as being a pretty strong or pretty significant support level. You can see there's a nice overlap as well at 1.2850. We can also see this strong ascending trend line as well. Right, so in terms of first resistance, it's pretty clear it's going to be the swing high that was formed on 13th of July. If we zoom out, uh, the pound is trading at more than a 1 year high or 52-week high. Right, you can see rebound very strongly since September, October of last year. In terms of first support, okay, first support is we have a nice overlap level here. And second support, we've also got a very nice overlap level at 1.2635. Okay, let's just do a Fibonacci retracement and see if there's any retracement levels to add to contribute as an additional factors to the overlaps that were identified earlier. Okay, 23 is here. Okay, we can't use this Fibonacci retrace any of these levels, they're just simply too far. So let's just get rid of this. Okay, that's fine. Okay, this is on the daily time frame. Now let's zoom in onto the 4-hour time frame um, to try and identify any other potential levels or more actionable levels. All right. Okay, so price broke out. Okay, right. Okay, we can probably do a Fibonacci. Yes, if we zoom out a bit. Okay, we can do. Let's try by running a Fibonacci retracement from this swing low on 29th of June. Going up to the swing high here on 14th of July. We can see, alright, price has actually broken through most of the levels, including 61 as well. You can sort of argue that price found support around or close to the 61.8% Fibonacci retracement level before reversing to go higher. Right, okay, but because of that, as price breaks through the levels, we know they become invalid, so we're not going to use them. The only valid level for this part of the move is 78.6%, which is okay. Let's just keep 78.6 for now and see if we can use it as a potential support level. Okay, then in terms of, I can also do a nice, I think we can use the Fibonacci projection starting here, 14th July, going down to this swing low on 24th of July and ending with a swing high on 27th July. All right, let's pull up all the fibs. Right, okay, this is pretty nice. Okay, we can see that price did indeed get rejected or find support at 61.8% Fibonacci projection level before, yeah, and then after that proceeded to bounce higher. 78.6 projection is here and 100% is here. So 100% is something that we can probably use to add as an additional factor to back up the second support level. 78.6, could we see anything here? I think, okay, we can see a pretty decent pullback at this level. So for this 4-hour time frame for the pound, right? First support is where price is currently trading at. So there's no need to adjust that level. But for the 4-hour time frame, I think as a more actionable second support level will be at 1.2753. You can see a pretty decent pullback at this level, and it also aligns slightly above the 78.6% Fibonacci projection level as well. Alright, so I think we can use this level here. Oh, and it also, you could say this is a bit of a Fibo confluence level as well. We have the 78.6% Fibonacci retracement, and we have the 78.6% Fibonacci projection. That's probably giving a pretty strong um, support level here. I think, let's see if I were to, yeah, okay. So I think I'll use this level here. Okay, this is just to keep an idea to where the next support could be, and I will just highlight this as well here. You can see price bouncing off this level. Right. Okay, do take note 61.8% Fibonacci projection is no longer valid because price has reached this level and proceeded to reverse. So yes, we're not going to keep this here. Um, yeah, we're not going to keep this anymore. But this would have been good to project as price started to come back, pull back last week. So if you had done this projection last week, we would have seen, or we would have anticipated for price to at least fall close to the 61.8% Fibonacci projection level, and this is an area where potentially uh, price would start to find support, and this is an area potential take profit area as well, especially after price pound dollar started to fall sharply on Thursday. Okay, all right, second support. Okay, just for the 4-hour time frame, I'm going to remove the second support. I'm also going to remove this Fibonacci. I'll just keep 61 just to give us an idea of how this projection actually worked really well in identifying the potentials support area. And then we can also see 78.6. Okay, 78.6 is a bit too far for to be used currently, so let's just get rid of that. Okay, now the chart is much more clearer. And what else can I do? Okay, I can also do a Fibonacci retracement on this swing high here that starts on 27 July ending with 28 July. Let's pull up all the fibs. Right, you can see price has come as high as a 50% retracement and has proceeded to fall back or retreat from this level. So let's keep 58. Oh, sorry, not 50. Let's keep 50%. So to me, this would be an intermediate resistance level here. I'm going to identify this level at 1.2880 as an intermediate resistance level because price ran into resistance here last week, as well as we have another factor contributing to it, which is the 50% Fibonacci retracement level. And for the 4-hour time frame, of course, I'm going to label this as the second resistance. And naturally, the first resistance will be this swing high here that took place on 27th of July, right? So it's important to take note of the resistance levels on the daily time frame to give us a overarching view. And then as we zoom in into the smaller time frames, like what we're doing now on the 4-hour time frames, we have to try and identify levels that are more actionable for the next 1 or 2 days. All right, okay. Right, so this is pound dollar. Okay, I think I can do another projection as well. Okay, let's see. Let's do a projection from here. Anything else? Okay, I think we can use 61.8% Fibonacci projection. Okay, just to zoom in a bit. So I did the projection starting from 27th of July, going down to the swing low 28 July, ending with the swing high on 28 July again. So as we can see, the 61.8% Fibonacci projection level lines up almost exactly with where the second support has been identified at the overlap. So we're going to keep 61.8%. So this 61.8% Fibonacci projection level is adding as another factor to this overlap level to signify a major uh, support level for the pound dollar at 1.2753. Let me just adjust the labeling. Right, okay, so this is pretty clear now. Okay, so once again, as we expect dollar index to retreat, to fall, remember it is heading back towards the 23.6% Fibonacci retracement level. You see a small pullback here. This level could of could offer some slight support, but it does look like dollar index is going to fall towards this level. So that means pound dollar is going to bounce off 1.2850, and if it does break through this intermediate resistance here at the 50% Fibonacci retracement level, then definitely this would pave the move for pound dollar to climb higher, at least towards 1.29, at least break towards 1.29 over the next 1 or 2 days. And likewise for the euro dollar, that means it should be at least breaking through or breaking above 1.1050. All right. Okay, then we can also look at AJ. Okay, Kelvin, do you mean Aussie yen, right? Aussie Japanese yen? Is that what you're asking for? Okay, I believe so. AJ, right? Okay, yeah, I believe that's what it is. Okay, so let's see. Let's head on down. Where's my Aussie yen? Okay, right. All right. Okay, let's start off with the daily time frame first. All right. Okay. All right. Okay. Okay, let's just start from scratch. Let's do this analysis together from a clean slate. Using a clean slate. Okay. So I think okay. First of all, we're on a daily time frame. I think what's pretty clear is we can see a nice move up here. So let's try and use a Fibonacci retracement starting from the swing low on 24th of March, going up to the swing high on 19th of June. Right. Okay. So we can see 38.2, 50%. Yeah, I think we can keep 38.2 and 50% Fibonacci retracements. So we can see at least on the daily time frame, the first major support for this pair would be right at this level here. So we can see a pullback, a small pullback here as well, back on 13th of December. Then we see price finding support on 11 July as well as 28 July. Of course, the wick broke all the way down here, but I think at least in terms of the first actionable support level, this would be at 93.35, right? So we have overlap level here plus the 38.2% Fibonacci retracement. Okay, now with regards to the second support, we can probably see, right, okay, this probably a decent pullback. Okay, not the best overlap, but probably a decent pullback level that we can see here. Price got rejected here on 2nd of May and then again on 22nd of May as well. Again, not the best overlap or pullback level, but it does align pretty close to the 50% Fibonacci retracement level. So at least this gives us a better idea of where the second support could be, which is at 92.17. All right. All right, Jamilo. Yes, we will definitely touch on gold after this as well. Okay. What about Fibonacci extensions? Can we find any extensions? No. Let's see. Okay, in terms of resistance, oops, right, at least on a daily time frame, we can use this swing high here that took place on 25th of July. I think as we see price coming pretty strongly to this level here, this is a recent swing high as well. So there's first resistance will definitely be at 95.78. Second resistance we can probably use, yes, use this here, this overlap level here. You can see price running the resistance on 23rd of June and as well as again on 4th of July and 5th of July. So this is where we can identify the second resistance for the Aussie yen on the daily time frame. Alright, okay, let's quickly zoom in onto the 4-hour time frame and see if we can identify anything else. No, okay, we can also do, we can see, maybe we can use the, I'm going to use a Fibonacci extension, which is the 127 or 127 here, so it's not really helping us to identify anything else. So I think, okay, in terms of Fibonacci levels, we can't really use any of the retracements here on the 4-hour time frame. Nothing really significant to use yet, but I think we have some very good levels, overlap levels, that we can use, that we have identified, that we have used to identify the first resistance, second resistance, as well as first support and second support. All right, okay, let's go on to gold. So naturally, if the dollar index is retreating, we can expect gold to be at least be elevated, right? We have a negative correlation with gold, right? So if dollar index or the US dollar is falling, gold should be going higher. So let's quickly take a look, right? So dollar index is retreating. This is gold. Okay, so these are some of the levels that were identified this morning, right? In the pre-market analysis. So as you can see, uh, since July, mid-July, price has been sort of been ranging between 1,940 and 1,980. Gold has been just pretty sort of trading sideways, but is not rising as quickly. Yeah, the negative correlation doesn't seem as strong as it should be today, right? Because we see dollar index starting to pull back, we should also see gold climb higher. So let's see, maybe as the day progresses, we could see gold push higher. All right. Okay, so how do we identify the levels on a daily time frame? Okay, we use the Fibonacci. What is this? This is a Fibonacci retracement. Right, so we did a Fibonacci retracement using the 50% to identify the first support or first resistance. Second resistance would be the swing high on 5th of May. First support, you can see a nice overlap here at 1,940, between 1,935, 1,940. And even if I were to pull back all the way till here, you can see that this level does has offered pretty strong support. And of course, the next support level would be at the swing low on 29th of June. Okay, let's go into the 4-hour time frame and try and identify any other levels. Okay, we can do a Fibonacci retracement from this swing low here on 29th of June, going to the swing high on 20th of July. Let's see if the Fibs come up with anything else. 50%. Okay, we can see, all right, probably in terms of for the 4-hour chart, we can probably use this 50% Fibonacci retracement level and this overlaps here to identify the first support. Right, for the 4-hour time frame, you could probably say that the first support would be at 1,940. Right, using a combination of the overlap and the 50% Fibonacci retracement. 61% is here. So yeah, so if price does break through this downside confirmation on a daily time frame, the next support for the 4-hour time frame would be where price is at the 61.8% Fibonacci retracement level. We see a pretty decent pullback here as well. Right, so this is how we identify the second support on the 4-hour time frame. All right, let's see what about resistance. Any other clearer or more actionable resistance levels? Okay, once again, 50%. We can use 50% here. We can see that price has retraced up to 1,961 last week and then proceeded to retreat from here. So we can see that this does offer a little bit of resistance. So I like to label this as an intermediate resistance because we don't really see any other strong overlaps or pullbacks. So we'll just highlight this level at 1,962 as an intermediate resistance, and we'll just keep 50% Fibonacci retracement. Right, so if dollar index does continue to fall, and we would like to see gold at least break through 1,962 to go up all the way to the first major resistance at 1,980. Right, so the first major resistance would be at 1,980, intermediate resistance at 1,962. We also have this 38.2%. Okay, actually 23 and 38 can't be used. We'll just keep 50. So and 61. So let's just tidy up. So this retracements, we'll keep 50 and 61. All right. Okay. So for gold, on the 4-hour time frame, first resistance is at about 1,980. Intermediate resistance is at 1,962, which has been identified by the 50% Fibonacci retracement, as well as price action running into resistance here on 28th of July. First support is at 1,940, which has been identified by the 50% retracement level, as well as this pullback over here, this overlap support here. and we have this downside confirmation support level found on the daily time frame. And for the second support on a 4-hour time frame, we can use this pullback level here at 1930. That also aligns closely with the 61.8% Fibonacci retracement. Alright, okay, so this is gold. So once again, negative correlation between dollar index and gold. So if we continue to see dollar index falling, gold is likely to climb higher and at least reach 1962 again. Alright, okay, dollar franc. So naturally, the dollar is strong. Dollar franc has been rebounded strongly last week as well. But of course, now it's pulling back. Dollar index is pulling back. So this is positive correlation, right? So now we're talking about positive correlation. As dollar index goes up, dollar franc goes up, and vice versa. Right. Okay, so let's look daily time frame. Let's see what levels can be used. Right. Okay. So we have done the Fibonacci retracement and projection as well. Right, so we use the projection to identify which levels do we. Okay, the 100% Fibonacci projection level to help us identify the first support, which is where the recent swing low occurred. Right, so this is also applicable for the 4-hour time frame. So first support is at 85.30. First resistance will definitely be at 87.58. You can see a very strong overlap as well here, or rather we see price bouncing off this level at 87.58. And this also lines up. What does this line up with? Is it a Fibonacci? Okay, so this is a Fibonacci projection. Okay, so we have done a Fibonacci projection here, starting from the swing low on 9th May, going up to swing high 31st May, and ending with the swing low on 31st of July. So we've done the projection to help us identify resistance levels. We're using 61.8% Fibonacci projection level as a additional factor to identifying the overlap here, and we're using the 100% Fibonacci projection level as an additional factor for the second resistance, right? The second resistance is also a nice overlap level at 0.8902. Right, so we're using Fibonacci projection to help us provide additional factors for the identification of the resistance levels. All right. Okay, now let's zoom in onto the 4-hour time frame. Okay. Right, can we use anything else? Okay, can also do a Fibonacci retracement here. I want to see if I can use the extension levels. Okay, it's a bit. Okay, so I'm going to use Fibonacci extension. So this is the extension of. So I did the Fibonacci retracement from 24th July going down to 27th July, and I'm using this. Basically, we can see a nice V-shaped bounce or a big Nike tick, if you can imagine. Right, let me get my pen up, and you can see right a nice Nike tick or V-shaped bounce here. So we can see that 127 percent Fibonacci extension also aligns pretty close with the 61.8% Fibonacci projection. So we have a confluence of Fibonacci levels to help us add more significance to the first resistance. So I'll just label this as a zone as well, potentially. Right, as you can see last week as well on 28th of July, the wick went as high as 87.36, and it just retreated just under the 127% Fibonacci extension level. So we have a very nice strong support or strong resistance area or zone for dollar franc. And since we're expecting dollar index to fall, we can expect uh, dollar dollar franc to fall as well. Okay, what about support levels? More immediate actionable support levels. So we'll do Fibonacci retracement from the swing low 27 July ending with a swing high 28th of July. Let's pull up all the fibs. Okay, so we can see Okay, there's 38 is here, 50 is here. Right, we have a pretty decent, I guess, pullback support level at 38.2%. So something that's more actionable that we can use. But this is not a major overlap, so I'm just going to highlight it as a intermediate support. And then if you look at 50 as well, again, not the best overlap or pullback, but maybe use that, or would have 61 be better? I think 61 would probably be a little bit better. Yeah, 61 would be a little bit better. Okay, so we're just going to keep 38 and 61, and I'll explain in a minute why we're doing that. Okay, so we can see the level at 86.65 is a pretty decent pullback level. We have a 38.2% Fibonacci retracement to help add some significance to this level, but do take note this is a pretty weak support level. And then at 61.8% Fibonacci retracement, we see a pretty decent pullback as well, which is at 86.24. Right, so in terms of more actionable support levels for the dollar franc, 86.65 is one, but do take note this is a pretty weak uh, support level in my opinion. Where price could find a bit more support would be this decent overlap or pullback support at 86.24, which also aligns with the 61.8% Fibonacci retracement. But the main support level is has been identified with the 100% projection level, that and this zone here. We can see a multi-swing low support here at 85.60. All right, okay. If there's no further requests, maybe we'll just end off the note by looking at Aussie dollar, because tomorrow, as we know, the Reserve Bank of Australia is going to release its or announce its cash rate statement at 4:30 a.m. GMT, where they are expected to raise interest rates by 25 basis points to bring it up to 4.35. But given that um, inflation has been retreating pretty steadily in Australia, there is a chance that the RBA may actually hold rates again. And if they do so, this would be the third time that they will be holding rates in 2023. All right, but let's just look at technical levels to watch out for going into the RBA meeting tomorrow. Right. Okay. So this is the daily time frame. So as you can see, Aussie dollar has rebounded pretty strongly off the lows at 66.20 from last week. It's trying to push. It's already broken. Yes, it's testing 67 cents, and it could break above this. Right, as we expect dollar index to be weak, Aussie dollar is going to go higher. So this is another case of negative correlation. All right, we have done a Fibonacci projection here. Okay, what is this projection used to identify? 61.8. Okay, this projection here, as we can see here, starting from the swing low, was used to identify to help identify the second resistance here. We can see a nice overlap at 71.36, and we also have the Fibonacci projection at 61.8% to add as a contributing factor. Right. For first resistance on the daily time frame, this multi-swing high at 68.90 is very clear. So this is a very good first resistance level on the daily time frame. Right. And for first support, we can see that this is a pretty decent overlap here as well at 65.80. And the second support is at exactly 65. You can see a decent pullback level here. And if you were to really zoom out, we have done a Fibonacci retracement from this swing low on March 2020 all the way to the swing high on 26 Feb 21. And you can see the retracement level at 61.8% here lines up pretty well with the swing low that took place at the end of May, right? So that is how we've identified the second support by a combination of an overlap level as well as the 61.8% Fibonacci retracement. All right, I can also see do a nice retracement level here and try to identify more actionable resistance levels. So, right, okay, 38.2, we can see price bouncing off this level on 24th of July. So potentially this is an intermediate resistance level that we can identify on a 4-hour time frame. So I'm going to keep 38 and 61. Okay. In terms of more actionable support, we can see here. I would like to label 66.45 as an intermediate support level here, and the 38.2% Fibonacci retracement. I like to label that as a intermediate resistance for now. So it's 67.26. And the next resistance level probably would be this overlap here that aligns with the 61.8% retracement as well. Right. Okay, now let's zoom into the 4-hour time frame to quickly fine tune some of the levels. Right. Okay. Okay. Now that I'm in the 4-hour time frame, okay. The levels that we mentioned earlier, the second support, first support, and of course first resistance were identified on the daily time frame. But I think we can use much closer levels that are a bit more closer to where price is trading, since we're looking at the 4-hour chart. So I think this swing low here, I think I would like to prefer to use this. Actually, okay, I'll keep this as the intermediate support, and I'll probably use this overlap level here as the first major support for on the 4-hour time frame. Right, we can see price bouncing off this level a few times back in July, early July, and then as recently as last week. And then we can use this level at 66.45 as an intermediate support by using the body of the candle. But the first major support would be at 66.22. And I think this first support that was identified on the daily time frame can then become our second support on the 4-hour time frame. All right, and we'll just clean this up a bit. Okay, in terms of resistance, this intermediate resistance at 67.26, I'm going to identify this as the first resistance on the 4-hour time frame. This is a level that we can use that is more relevant to where price is currently trading. And we can also see a nice pullback here that took place towards the end of July at 67.27, and it also lines up with the 38.2% Fibonacci retracement. So I think first resistance, I'll keep it here. In terms of second resistance, now that I zoom in a little bit more, let me see, 78.6. Would 78.6 be better? Yes, okay. I think this is probably a little bit better overlap or resistance. Okay. Actually, the other two levels, okay, I'm just going to keep 38. The other two Fibonacci retracement levels don't line up well with any other overlaps. Remember, it's quite important not to force a Fibonacci level, right? Just because all the Fibonacci levels are there, it doesn't mean we should use it all the time, use the levels all the time. What we like to see is a nice overlap level first, and if we do have a Fibonacci projection, retracement, or expansion that adds as a contributing factor, that's great. But otherwise, we like to see strong price action first, and I think for the second resistance on the 4-hour time frame, you can use this swing high here on 27th of July. Right. Okay. So for the Aussie dollar, um, if they do increase or raise rates tomorrow morning, and with the dollar continuing to be weak, it is quite likely we may see Aussie dollar break through this first resistance at 67.26. All right, and and do take note that the US dollar could be weak for the first half, or at least for the first 2 to 3 trading days of the week, as dollar, and then that would be naturally dollar index is falling. But as we see US employment data come online starting tomorrow at 2 p.m. GMT with JOLTS opening, then we have ADP on Wednesday, and of course finally we also have unemployment claims on Thursday, and finally the big one, which is non-farm payrolls on Friday, 4th August, 12:30 p.m. Should all or most of the employment data show jobs being added steadily or stronger than the forecast, it's very likely we're going to see demand for the US dollar come back in, and then that would mean naturally dollar index is going to rise, gold is going to fall, euro dollar is going to fall, pound dollar is going to fall, dollar yen is going to rise. So do take note, dollar index could be weak for the first half of the week, or could be, and then should the employment data come in stronger than expected, then we could have another strong finish for the US dollar and hence the dollar index again. All right. Okay. Thank you everyone for tuning in today. Hope this has been a great session for all of you, and I hope you've also managed to catch Desmond at the pre-market live analysis earlier this morning as well. If you have missed that, head over to IC Markets YouTube page, look for search for Desmond pre-market analysis, and do catch that video as well, because he'll go through most of the majors as well as commodities and give you the weekly outlook, weekly technical outlook for all those pairs. All right. Thank you, everyone. Thanks for tuning in once again. Oh, and just before we round up, just have to take. Oh yeah, these are the main economic events, and of course, we just have to end up with a disclaimer again. Alright, so do take note, trading FX and Forex and CFDs carry a very high level of risk to your capital, and you should only trade with money you can afford to lose. Right? So please perform all due diligence before putting on any trades. Alright? Thank you, everyone. Take care, and once again. And looking forward to catching all of you at the next session. Alright, cheers guys. Thank you.